Warren Buffett said the U.S. tax cut will make companies more valuable by giving owners a bigger share of profits. People who own the businesses, they now own 20% more of the domestic earnings, Buffett, chief executive of Berkshire Hathaway Inc., said in an interview on CNBC Wednesday. Describing the change as a big deal, he gave as an example Berkshire Hathaway's BNSF railway. And we went from 65 to 79% of the profits of BNSF, and that is a more than 20% increase. Still, when asked about whether he would have pushed lawmakers to vote for or against the legislation, he chose another route. "I would have had a different bill," he said. "If I did it as a representative of Berkshire shareholders, I would have had to vote for it." Here are some of his other comments on Bitcoin. Buffett said he's no fan of cryptocurrencies and is confident that the run-up in their value is fleeting. Now when it happens, or how or anything else, I don't know. But I know this: if I could buy a 5-year put on every one of the cryptocurrencies, I'd be glad to do it, but I would never short a dime's worth. We're basically buyers over time. There could be conditions under which we're sellers. For one thing, the money keeps coming, so we basically keep buying. On IBM, Buffett was asked whether he's been a buyer or seller of the stock. Berkshire owned 37 million shares of the company as of the end of September. It was advantageous if you had a loss in shares, and we did in some of IBM. It was advantageous to sell last year rather than this year, he said. And we had some of both. IBM's rocky ride, the giant's shares lost almost 8% last year. Berkshire Vice Chairman Charles Munger joined Buffett in the interview and also addressed succession at the conglomerate, saying shareholders probably have 7 or more good years coming out of Warren.